Last week, in one day, 41% of the physical gold bullion from the kilo vaults at the Chicago Mercantile Exchange were drained.
And it's been quite interesting seeing the gyrations in the market since we returned. And one of the things that I wanted to point out was that with the stumbling of the major stock markets, and I would like to get your feedback on this, that coming on the heels of, or in the context of that large $50 million gold and silver order that was taken by one of our brokers at Miles Franklin, that's been well publicized and talked about a lot, is we're starting to see, and I've heard this from other places as well, starting to see other large orders, maybe not that large, but much larger than typical orders in the past, coming out of the woodwork as people are taking seriously, having seen that major player make their move. Now it seems that other people of means, business owners and others, are considering it's time to make their move. On my own little tiny corner of the world, I have two separate clients who have approached me and said, could I be prepared to handle up to $5 million orders from them in the next short period of time? And I talked with you about one of those and said on that particular day, it would pretty much clean our shelves out of most of our sovereign minted silver coins. And if I had to deal with two of those in the same week or month, I don't know what we'd do exactly. And that's just one of your many brokers in one little corner of our world. So just thought if we could get your perspectives on what you think the thought processes are that are awakening in people's minds of means, having had that very significant order happen, perhaps a record order of all time on a retail basis in the U.S. here, and what it might be spelling for the near term for people who are waiting to make their move, waiting for a perfect low, waiting for that right time to make sure that they can get the physical they're looking for.
Well, let me answer that a little bit differently, and then I'll answer it the way you intend it. We are seeing a continuation of many of the things that we've talked about repetitively, namely repatriation, accumulation of metal by the big money and pulling it off of the exchanges. Last week, I believe it was last week, we're seeing, and I believe these are the others, and I'll tell you why in a minute, the others that we've talked about on your show, which are the family offices and the sovereign wealth funds that are draining the COMEX market. Last week, in one day, 41% of the physical gold bullion from the kilo vaults at the Chicago Mercantile Exchange were drained. 41% of all of the kilo bars that are held at the CME were drained. That works in one day. That works out to almost 175 million troy ounces. And what's most interesting about this withdrawal is that they weren't the typical 400-ounce London good delivery bars or the 100-ounce gold bars that the sovereigns would accumulate, that the central banks would accumulate, that even the commercial banks would accumulate. It's likely the smaller but incredibly wealthy sovereign wealth funds, family offices, private investors, the uber wealthy and the connected individuals that have suddenly decided to, once again, take massive position in physical gold. And you know, it's almost as if they know something's coming, because let's put this in perspective for a minute. The COMEX 50-day average rate of gold withdrawals just hit a new high of 131,293 ounces. And let's think about what this really means for a moment. On average, 131,293 ounces of gold, or roughly $233 million a day, have been withdrawn from the COMEX every day for the past 50 days. So, you know, you're talking 175 million ounces have been pulled off the COMEX in kilo bars. And I wonder, do these people know something is coming? I don't know. If you look at the amount of silver on COMEX, a tremendous amount has been withdrawn recently. We talked last week about 100 million ounces being drawn out of SLV in the last month. But right now, in terms of silver on the COMEX, there's only 55 million ounces left in the registered category. To put that in perspective, we've seen that much delivered off of COMEX in the last 5 months. So in theory, there's only 5 months worth of deliveries left on COMEX in the registered category. Yet we were told a week before that over 200 million ounces were taken out in one day on the London Metals Exchange. So big money is taking possession of metal and in staggering amounts. So I think whether you're talking people here in the retail space who are waking up to what rising interest rates will do to their equity portfolios, to their bond portfolios, to the real estate portfolios, or inflation does to their cash holdings, I think that you're seeing an awakening again, a gradual awakening that is continuing. We've talked a lot about this. So much of this inflation has been holed up in financial assets. And if we start to see a repositioning out of these financial assets into tangibles like gold and silver, which it appears that we are, I think you're going to see a real rush to take all of these dollars that have been created over the last several years and put them in somewhere safe. It's much easier these days to make money than it is to keep it. And I think you're getting people that are beginning to realize that. And you're right. When you called me offline last week and told me that, hey, I have someone that may be interested in $5 or $6 million. Yeah, that's not a problem to do that order. But what does it do to our inventory? 2 or 3 or 4 of those. It's just an acceleration of something that I've been saying on your show for a year and a half, that ultimately the market in the United States is defined by the inability to readily and easily source product. And I just want people to know, once again, I am talking, this is what I see down the road. It's not here today. We did a $50 million deal. We can do a $5 million deal. But getting these items, which I always took for granted. In fact, my biggest single concern was finding clients. Now it's the complete opposite of that, thank God. But it's another problem, and that problem is sourcing product down the road. I believe it will be a very big problem because there's so much money out there chasing a very small amount of gold. What does that remind you of? That's price inflation. The more demand, the less supply is only going to jack prices up higher and higher and higher. And I really think that the smart guys are getting their bullion out of the warehouses now while they still can. And it always starts way up here and starts to trickle down. And you're talking the wealthiest private investors in the world are taking 175 million ounces off of COMEX. I would argue something wicked this way comes. And then it will start to transition down to the little guy, me, you, and everyone else. And we're the little guys. We're not the commercial banks. We're not the sovereign wealth funds. We're fighting for the scraps. But, when you see that kind of record withdrawals happening on both COMEX, silver, and gold, backdooring out of SLV by the commercial banks, and huge exchange for physical withdrawals on the London Metals Exchange, they're pulling out all of the stops to take physical possession. And I think it will only increase as an awareness comes that the Fed is not going to do what it takes to fight inflation, and inflation is going to erode further purchasing power of people holding dollars. And if they do get tough on inflation, or God forbid the things that I've been talking about, the de-dollarization by the East, by the BRICS nations. I see Alistair McLeod, someone I respect so much, just came out and said the same thing we've been talking about for a year, that the world is splitting in two, East and West. The East is a group of countries that is dominated by commodities. The West is a group of insolvent countries that is dominated by debt instruments. And so you're beginning to see this dichotomy, this fracturing of the system. And I think little by little, people are awakening to this. The people who are pulling the strings, the connected people, that's why they're massively taking withdrawals off the exchanges. That's the first salvo. The rest of us will figure it out after you see some sort of issue where the stockpiles are drained so much that it has to be talked about on the mainstream news sources, not by someone like me who spends all afternoon digging every day looking for crumbs of information that if you look hard enough, you look at it and you say, oh my God, I mean, is that really true? 175 million ounces of gold withdrawn off of COMEX in a very short period of time. I think that it's, when you're seeing over 130 million ounces a day on average being taken off of COMEX, if that doesn't crystallize everything that I've been trying to get across here, I don't know what does. This is no joke when literally you're down to 55 million ounces of registered silver on COMEX, and that's how much has been delivered in the last 5 months. But many times that was delivered off the London Metals Exchange a few weeks ago, and 4 times that amount off of SLV in the last month. So is it really that much? No, it's not. If you figure that 850 million ounces of silver are mined each year, and we only have 55 million ounces that is backing the price setting mechanism of the West, it's a joke. So the big money realizes this, and they are doing all they can to rip it off the exchanges and prepare. And it will trickle down into the mainstream, who I think will be left holding the bag, who doesn't have the ability to accumulate stuff after the big money has already, as always, positioned themselves for whatever this next move may be.
Yeah, what was that quote from your Econ 101 class about the little man rule?
Yeah, well, the little guy never wins, because the little guy always is the one who makes his or her move after the big man or the big guy has positioned themselves, and they're always late to the party. And that's why most people are never successful in investing, because they follow the herd. There's a whole school of thought, wave theory, Elliott wave, Kondratiev wave. This is all based on human emotions. And wave theory is very accurate to a degree where, human emotion is very powerful, and it's precisely the wrong thing to do in investing. But the big guy is always repositioning when other people are not even thinking about that. When gold and silver are beaten down and no one wants it, that's when they're repositioning. Ask Rick Rule. He'll tell you the biggest money he's ever made has been when buying when there's blood in the streets. He talks about publicly one of his biggest deals that he ever did. He bought, and when he bought it, it collapsed in price, but his conviction was so strong, he doubled down, and it became one of the biggest scores ever in his professional career that he made, because he understands that the only way to successfully position yourself is to become a contrarian. And as he often says, if you're not a contrarian now, you'll be a victim. I think that's really what he's trying to get across, is that it's easy to follow the herd, and you'll usually be wrong. You might be right for a few days, but by the time the herd catches on, the insiders are probably already moving in the other direction. Now, this may be a little bit different this time, where the insiders aren't going to pivot and sell and to capture profits at the expense of the public. But I think what will happen more appropriately is that the public will just be shut out. Look at the U.S. Mint as an example. Here again, model of inefficiency. Premiums on gold eagles going through the roof. Premiums on silver eagles going through the roof. Inability to source it easily. This is just one example that I think will continue to manifest into what is a very small pool of available supply. But in every form of investing, the huge investors are the ones closest to the information. They're the ones who make their moves when it seems counterintuitive. Yet you have to really dig to find it, because you're not going to find this information watching Fox News or reading the Wall Street Journal or any other financial newspaper. You got to dig. And in order to dig, you have to read things that'll make you want to fall asleep reading the COMEX or going to the Fed website and reading all of their nonsense. But the bottom line is it's happening. And I think it is pivotal to everything we've been talking about, this linear progression of events that all leads to de-dollarization town. And the biggest money in the world is doing that right in front of us with massive withdrawal.